and welcome to Sold by Karen. Today, I have really exciting news. I have a guest with me, and he is going to answer questions about lending or financing your home. It's got to be the most stressful part of a home purchase. Am I going to get approved? Will I get approved for enough? Will the home appraise at the right amount? And there's like 100 questions. But I am very lucky that Brian Meador works in my office, and I kind of sprung it on him at the last minute and said, hey, would you just answer 5 or 6 questions for us? So if you have other questions that we don't address today, please put them in the comment down below, and I'm sure he'll do this for us again. If you know of anybody who would be interested in today's video, please feel free to tag them in the comments. Share this video, tell your friends about it, tell your coworkers about it. If you've got other ideas for video information that you would like to know, please, again, put it down in the comments. I'm here to answer your questions and address all your issues. So in the meantime, let's get started with Brian. Brian, would you like to take a moment and just give us a really brief introduction on yourself?
Hi, I'm Brian Meador with Homebridge Financial Services. I'm a licensed mortgage lender in Bradenton, Florida. I'm partnered with Marcus & Company Realty, and I'm happy to serve you.
Thanks, Brian. So our very first question is, how do I even start the process of finding a lender and getting financing for a new home purchase?
So as far as where you should start with the mortgage process, the best thing to do, my preferred option, is to give me a phone call and we can talk through the application process, get the information we need to pull a credit report, get an idea of your income, your assets, and your liabilities. We also have online applications for convenience. My application is applywithbry.com, and that's really the best place to start so we can figure out what price range you should target, what you're comfortable with as far as a monthly payment, and kind of work from there to make sure you get into a house and a house payment that is comfortable for you.
Wow. I don't know about anybody else, but the part I heard that really stood out to me was, I prefer to talk to you versus just fill it out. We'll let you know in a couple weeks, but that's awesome. Next question, Brian. Underwriter. We hear this term all the time. We hear how the loan has to go to the underwriter, the application has to go to the underwriter. Can you explain real quick just exactly what is an underwriter?
What is an underwriter? An underwriter is an integral piece to the approval process. So our underwriters, their job is to review your loan file and all the supporting documents, and they're going to make sure that your loan application meets all the guidelines determined by the agencies, whether it's an FHA loan, VA loan, Fannie Mae, Freddie Mac. They all have their own guidelines, and our underwriter's responsibility is to make sure we're meeting those guidelines. They're going to do an initial review of your application, and they're going to come back with what we call a conditional approval, and they're going to have items that they want to request and receive to get your file prepared for final underwriting and final approval.
Wow, it sounds like the underwriters are really the check and balance of the loan process. And thank you for clearing that up for us. I think everybody kind of wondered, why do we keep hearing about an underwriter? So thanks, Brian. Next question. We're hearing a lot right now about federal rate. Does that actually affect our interest rate immediately down the road? Exactly what is the difference? Federal rate versus interest rate.
The Fed rate and mortgage interest rates are not directly correlated. There's a big misconception when the Fed increases rates that it's going to automatically increase mortgage rates. Actually, with the last 2 Fed rate hikes, in the last 2 meetings, they've increased the Fed rate 75 basis points, which is the first time in history they've done that big of a move in 2 consecutive meetings. Typically in the mortgage world, they kind of can forecast, or they kind of know what the Fed is up to, what they're going to do. So it's kind of built in already. And with the most recent two Fed interest rate hikes, it's actually helped mortgage rates a bit. It shows that the government, the Fed is interested in curtailing this inflation, and they're serious about improving it. So that makes the markets happy, which in turn can help mortgage interest rates.
That's great information, Brian. So our next question, if anybody here has ever been through a financing of a house before, you know that you repeatedly are asked for your bank statement. What are they looking for? Are they looking to see, did I eat out last night?
We review a bank statement. We're looking for a few things. For one, we're going to look at all the deposits. Anything that's non-payroll, that's an excessive amount. Each program has different limitations as to what we call large deposits that we have to source. If there are large deposits, we're going to ask the client for information on those deposits, and we're going to document them to make sure they're usable in our verified funds for the mortgage transaction. We're also going to look at the liabilities, or the withdrawals coming out of the accounts, to make sure there's no liabilities that are not shown on the credit report, or monthly recurring expenses that we're not seeing. Depending on the loan program, we're going to review 1 to 2 months bank statements, and we will have to address anything on those that may be of concern.
Thanks, Brian. That really cleared up the bank statement question, but it leads to the next question. Can my buyers actually go out and purchase items prior to the closing of the home? Can they buy the new appliances? Can they buy new furniture? Oh, can we buy a new car?
Buying new items is a big thing. When I send out an initial pre-approval letter, I put in bold red letters, do not incur any new expenses during the mortgage process. That means don't go out and buy a car, don't go out and get a new credit card, don't buy furniture before you're closing. There's some scenarios where you may be able to do that. You would just need to contact your loan officer to make sure that there's room in your debt-to-income ratios. But it's always something you need to get with us first. Now, you can still continue to use your credit cards as needed. You don't have to stop spending. You just really want to be sure that you're not establishing any new debts that we're going to have to count against the debt-to-income ratio that may disqualify you from a loan.
I think the number one takeaway from that one, Brian, is don't buy any large amount of items on credit until you have talked to your lender to make sure it is not going to kill the deal, because that's the last thing we want. Well, thanks, Brian, for answering the questions for us. And again, all of you watching this video, if you have other questions in regards to mortgages, lending, in home refinancing, second home purchasing a home that needs repairs, please put them in the comments or email me directly at Karen@soldbymarcus.com. The information's down below. And we'll ask Brian to drop in with us again some other time. Have a great day. Please like, share, subscribe, tell your friends. Thanks.